Hello, my dear students at home. I hope you are still staying safe. Welcome once again to St. Charles Online Teaching. I remain your business studies teacher, Mrs. Anazor Gloria. This week's lesson, before I will begin it by giving you the correction of the last lesson's assignment. I've seen your assignments which you did and sent to me. I marked it, and my observation is that some of you did well, while some couldn't enter the transactions. Some entered but couldn't balance their account. So for your correction, you will first draw the single column cash book indicating the debit side and the credit side. Then I told you that when money comes in, the transaction will be entered at the debit side. Like the first transaction started business with 15,000 naira. Money comes in, so you write capital at the debit side. Then the second transaction purchased goods, 4,000 naira. So money goes out. You enter it at the credit side. So will you enter all the transactions, all the expenses, all the money spent at the credit side, and all the ones that goes out at the debit side. Then you balance. In the steps of balancing, you will first add this credit side, and if you add the credit side, you will notice that the figure will be 6,700 naira. Then you also add the debit side. You will see that the debit side will be 19,700 naira. So when you subtract the credit side from the debit side, you will be getting 13,000 naira. So the 13,000 naira becomes your balance carried down at the credit side. So you write, when you add it, the two sides will now balance, and you have 19,700 at the debit side and 19,700 at the credit side. So you now write your balance brought down, which is the money which will be carried over to the next month's business, which is 13,000 naira. Now for this week's lesson, we are also going to continue with the columns, the cash book. So the 3 double column and the 3 column cash books. In the double column cash book, before we go, there are things, the objectives I expect you to watch out. By the end of this lesson, I expect that all of you are able to explain the double column and the 3 column cash books. Then draw the 2 column cash book and even the 3 column cash book. Put the items there and then explain the meaning of a discount. Now in double column, let me begin with the double column cash book. It is used to record cash and bank transactions where a business makes payments with check and receives check in addition to their cash receipts and their payments. So maybe the business has grown. Sometimes the owner makes payments with check, and sometimes the person who receives check as a means of payment. So in drawing the cash book, the double column cash book, now there is an additional column which is the bank column. That's what makes it double. So you now have date, particulars, folio, cash, and bank folio. So all the bank checks or money paid into the bank is recorded under the bank column, and all the ones receive cash is recorded under the cash column. Contra entry. A contra entry is when a transaction is entered twice in the same cash book. In entry transactions in both double and 3 column cash books, a contra entry may occur when a cash or money is withdrawn from the bank for office use, or when cash is taken from office and put into the bank. Then when this happen, you debit when you withdraw money from bank to office, you debit the cash and credit the bank. But when you withdraw money or take money from the office and pay into the bank, then you credit the cash because you remove money from it and then debit the bank. Okay, the next one is 3-column cash book. In the 3-column cash book provides extra columns for discount allowed on the debit side and discount received on the credit side. This is because the discount allowed is attached to sales, while the discount received is attached to purchases. Now, look at the format of the 3-column cash book. You see that just like the single column and the double column cash book, you have the date, particulars, folio. Then in 3 column, you add one more column, which is discount allowed and then discount received on the credit side. So, but I want also to remind you that the steps we followed in balancing the single column cash book, that's the assignment I gave you, is also applicable in balancing both the 2 and 3-column cash book. Now the next question is, what is discount? A discount is a percentage reduction in the price of goods. That is, you are allowed to pay a lower amount than you should for that product. So in discounts, for your own level, you need to know that we have 2 types of discounts. You have cash discount and you also have quantity discount. So sellers may decide to grant discounts to buyers to make them pay quickly and then buy more goods. Petty cash book. This is the last stage of cash book. Remember, we have studied the single column cash book, the double column cash book, 3-column cash book. Then the last one is the petty cash book. A petty cash book is the book in which details of minor or small expenses made in the office are recorded. The person who handles the petty cash book is called the petty cashier. This petty cashier controls the petty cash book by the management making money available to the petty cashier at the beginning of a period, say a month, from where he makes these expenses. And this system of giving the cashier money from where he will make the expenses is what we call the impress system. Then the amount given to the petty cashier is called float. And the petty cashier uses small amounts from the float to make payments for minor expenses. Then at the end of the month, he will balance his account, and then the money he spent will be given back to him to make up to the initial capital. And this system, we call it reimbursement. Now, items of petty cash book. When we say petty, it means small. So the items, small items that are recorded in the petty cash book include things like pencil, pen, stamp, office tea, coffee, typing paper, envelopes, eraser, correction fluid or pens, toilet soap, detergents, bus fare, carbon paper, milk, petrol, recharge cards, soft drinks, tissue paper, and so on. All these small items that are used in the offices. So when you buy them, it is recorded in the petty cash book. But the petty cashier cannot continue to write these items one by one. When he buys 20 naira worth of pen, he will go and record it. He used to analyze these items for convenience's sake. So these items can be grouped based on what they are used for. And this means that the items that serve similar purposes are put in the same category. For instance, when you buy an office pen or pin or correction fluid, you categorize them under stationaries. When you buy toilet soap, detergents, brooms, brush, you categorize them under office cleaning. When you buy tea, coffee, milk, biscuits, soft drinks, you categorize them under refreshments. When you buy stamps, send telegrams, buy envelopes, you categorize them under postage. When you give your worker small amount of money for bus fare or to buy petrol for the generator or taxi fare, you categorize them under transport. Then all other ones which you cannot or group them, you categorize them under miscellaneous. For instance, when you give out somebody 50 naira to buy something and you do recover a change of 5 naira or 10 naira, you have no other way or place of entering it. It is categorized under miscellaneous. So you now see that it is very, very important that every office must keep the petty cash book. So why is it important? Importance of keeping a petty cash book. The petty cash book helps to reduce the money spent by a business on bank transactions, like buying check and so on. Then it's also buying checkbooks and so on. Then it also reduces the burden of work on the bookkeeper. That is, when the bookkeeper continues to open accounts for this, recording every small thing that is done or bought in the office, they will just group the whole thing, tell the petty cashier to be managing it. Then another one, maintaining the petty cash book helps to minimize the risk of fraud in business. And finally, it helps an organization to regulate expenses on small items. These small items, you may think they are small, but when they are not regulated, you see that the office at the end of the month may have spent huge amount of money on all these small items. Now, in the format for a petty cash book, you don't need to create columns for toilet soap, biscuits, and so on. If you look at the format, you will see you have the folio, the date, the particulars, the voucher, the transport, stationery, postage, refreshment, sundry, and so on, depending on the columns created by the petty cashier. So the format for one office might be different from the format from another office, depending on the items used in that particular office. Now, for your assignment now, I would like you to use the following information to prepare a cash book for Globen and Sons, a petty cash book for Globen and Sons. Use the format, the diagram I gave you. You now enter the transactions, the information into the petty cash book. Let's say, for instance, May 1, the petty cashier receives 2,000 naira from the management. You enter it. Then when he paid for office pen, you go to the column for stationery and enter it. So you now see that sometimes the transactions might be entered twice. When you write the date, under particulars, you write the items, then also you go to the column for that item and enter it. So I will concentrate more on when I will be marking your assignment, I will check on your ability to put in office tea in the column for refreshment, toilet soap in the column for office cleaning, and so on. So do that assignment, make it bold, then snap it and send to me. I will stop here for today. Continue to stay safe, obey your parents, read your books. Glad to meet you next time.